Hi, I'm Simon Brown from Tribeca Investment Partners. Today, I'm talking about equity markets. Global equity markets delivered strong returns in 2025, with the MSCI World Index up around 22%. Beneath the headline result, non-US markets outperformed the US by around 10 percentage points. The key question is whether equity market performance can continue into 2026. We believe it can, because growth is accelerating and broadening. This supports a constructive outlook for markets, and we expect returns to rotate across sectors and geographies. As an Asia-Pacific equity specialist, that's an encouraging backdrop. What themes could drive this broadening in returns? We believe the shift is already underway, supported by defence spending, reindustrialisation, and the rebuilding of strategic capability. It's difficult to see geopolitical conditions becoming less volatile, and this is creating pressure on Western governments to increase defence capabilities for themselves and their allies. On reindustrialisation, the pandemic exposed vulnerabilities in global supply chains and has driven a shift towards redundancy and sovereign capability in critical areas. That shift is being enabled by advanced manufacturing, which is pulling through high capital expenditures and increasing demand for raw materials. In Australia, it's also important to highlight gold. The sector returned 127% in 2025 and is now a meaningful part of the market outside of the top 20 largest companies, and too large for investors to ignore. The cash flows are substantial, and we expect capital to flow into exploration, mine development, M&A, and capital management. These companies could be materially larger a year from now. Another key factor for 2026 is M&A and equity capital markets activity. If these themes play out, the ECM revival seen in 2025 is likely to accelerate in 26. In summary, we believe markets can rise, but leadership will need to broaden. There are multiple reinforcing themes that support that outcome, and a combination of broadening returns, rising capital activity, and a potential regional shift in performance is constructive for the opportunity set. Thank you.